This is Jeff Cooper with the Daily Market Report from T3 Live, coming to you after the close on the first day of the new quarter, July 2nd. What I'm showing here is a daily chart of the S&P, and we're going to explain why the tail of the trend should be told this week. The last five out of the six, the last five out of the last 6 days, I'm trying to say, have been reversal days. You can see here the gap down right here, a relatively quiet inside day, another reversal day last week here, another reversal day on Thursday, a reversal day on Friday, and today, Monday, another reversal day after a sharp down opening. There's no doubt that Mr. Market and the Bulls know this 2,700 level. It's the fulcrum for the year. It's the midpoint of 2018. It is most important here as there is a lot of symmetry with early July also being the midpoint of the year time-wise. So there's a lot of symmetry and synchronicity here with the beginning of July being the midpoint of the year and 2700, 2702 exactly being the midpoint of the year for the S&P 500. Additionally, we are 180 degrees from the January 2nd rip higher, and we are 90 degrees days from the April 2nd low close for the year, which is right here. So there is, as I said, a lot of symmetry in the time and price wheelhouse. How will we know which way it's going to pivot? Let's take a look at the weeklies, and I'll show you something which I think you will find interesting. The 3-week chart does a good job of defining the intermediate term trend. The 3-week chart on the S&P, despite all the volatility here, has not turned down all year. It turns down with 3 consecutive lower weekly lows or by trade below a circled 3-week chart low. In other words, say we had a 3-week chart low here, which is not the case, and then we rallied and then immediately, without turning the 3-week chart back up, traded back below the 3-week chart low. That would circled low, that in turn is the only other way the 3-week chart can turn down. So you see here we do not have 3 consecutive weekly lower lows all year. The last time that the 3-week chart turned down, interestingly, was right here where you see this little green arrow. Let's drill down a little closer. So you can see 3 consecutive lower lows, and it defined a low exactly on August 21st. What's interesting about this is that 10 months prior to August 21st basically ties to the November 2016 presidential election, and 10 months forward ties to June, late June. So there is a possible low to high cycle on the weeklies on the table. So while it certainly looked like with the hard down opening this morning, the 3-week chart could and should have turned down, it did not do so. It looks like the bulls are protecting the baby at this 2700 level. It would have been more bullish, I think, had we gotten this reversal today following a turn down in the 3-day chart. In a strongly trending market, turn downs in the 3-week chart that should define a low soon in terms of both time and price. So now another rally is potentially subject to fizzling out, just like we have seen on the dailies. All the rallies have been made for the selling since this late June high, which tested towards these important levels. The high before the high here, and the prior spring high, the late March high here. That's been acting as resistance. So If we had turned down the 3-week chart and reversed today, it would have been a reason to get more bullish. But the price action is the price action, and for the time being, we have another reversal, and it does set up from the 20-week moving average, which is potentially bullish here. So let's take a look back at the dailies again, and we'll see now for the third time, actually looks like the fourth time in the last 6 days, basically the S&P is closed right on its 50-period moving average. Last week I had a close here on it, again on Thursday, on Friday, and today. That's this blue line here. The S&P is been magnetized to close right at its 50-day moving average. So although we are at the we are pivoting off the 2700 level and the 20-week moving average for a possible weekly holy grail buy setup, the important thing to consider is that you've got what I call a Charlie's Angel sell signal on the table. That's three tails in close proximity, and it looks like they're on a mission to take out these lows and test the 200-day moving average, the magenta line here, and you've got triple bottoms from the spring at the 200-day, and typically you don't find quadruple bottoms. So chances are that's one of the reasons why the bulls are protecting the midpoint of the year so vehemently, because the entire structure could implode, could cave in if you break the midpoint of the year. That implies a test of the 200-day, and we've been there and done that 3 times. A breakthrough triple bottoms